Well, one of the most noted market voices, Neelkanth Mishra of Credit Suisse, has written a note after the monetary policy of the RBI. What he is saying is that the RBI's proactive move in order to ensure orderly yield control is something that is actually currently addressing the market dysfunction. According to Neelkanth Mishra, the MPC keeping rates and accommodative stance unchanged in April 2020 was largely expected. In fact, what he is saying is that inflation as well as growth targets were mostly unchanged, and that is why he believes that what the RBI has done, and he calls it a positive surprise. He believes a positive surprise was the start of the G-SAP, which according to him is the Govt Securities Acquisition Program. Rupees 1 trillion is to be bought in the first quarter. Now what he is saying is that effective lending rates in India is something that haven't really fallen off as much as the repo rate, and he believes that again there are certain issues to be addressed in terms of the transmission of the rate cuts. Also what he is saying is that given the fact that forecasts have been retained largely for growth, a 10.5% growth forecast in FY22 versus an IMF projection of 12.5, and inflation projection has actually been revised slightly upwards, is something that again that needs to be watched out for closely. According to Neelkanth Mishra, and this is something that's quite important, he says that the RBI's G-SAP or the G-SAP program, which is the Security Acquisition Program, he says it addresses the structural shortage as far as bond demand is concerned in India, and he believes that this shortage could continue given the fact that we are yet to hear about the inclusion of the global bond indices, of Indian bonds in the global bond indices. He believes that the inclusion of Indian bonds in the global bond indices is something that would be bringing in steady FPI flows. He also says that the RBI has committed to upfront a specific amount of open market G-SAP purchases in order to enable orderly evolution of the bond yield curve. The government and the RBI actually has ended FY21 with a record high 4.5 trillion in government cash balances with the RBI, given the fact that this is despite the staged borrowing and also they attribute it to slightly lower expenditure and better tax inflows that the government has seen in FY21. So overall, what Neelkanth Mishra is saying is that yesterday's moves, yesterday's commentary by the RBI were largely along expected lines. He also believes that the government G-SAP program is something that will give a particular amount of control or actually lends a certain amount of orderly stability to the bond yield curve. He is saying that the term premiums which shot up post the budget are still elevated and are among the highest in the world, mainly due to the structural demand problem. Overall, what they are saying is that growth and inflation is something that which the RBI has still kept up, is something that is quite positive.